Well, happy Thursday and welcome to the Market Carver. Hope you've had an outstanding week. I love the weather that we're having. This is incredible. It's also an incredible market time. Obviously, things that are going on with Apple, talking about the Federal Reserve Chairman, the things that are going on there. Another week or two, August 22nd, we have the Jackson Hole talk coming up with Janet Yellen. Very, very interesting times. Many of you have seen in the office over the summer. If you'd like to sit down and have a conversation to talk about what we own, why we own, Adam, myself, Jack, we're all happy to have those conversations. I do want to throw out a special congratulations this week to Andrew. Many of you have met him through the Third Laser, talked to him. He was one of my first students at Purdue in the very, very first class. Came to work at the Financial Enhancement Group a couple of years ago. Found out this week that he is now officially a chartered market technician. So not only is Adam a CFA, we also have a chartered market technician, a CMT, on the team, and very, very honored to have them as part of the allocation team. Way to go, Andrew. Very, very proud of you. Starting with the fundamental leg, let's get to valuations. A lot of people have said, Joe, this market has to be overvalued. Well, you know I work more on the behavioral finance side than I do the valuation side. That's more Adam's handle. I will tell you, this research shows that the market is not at all overvalued based on normalized trailing or forward earning ratios relative to market history. What I would argue is that history does not necessarily tell us what's going to happen tomorrow. This market has had a big run without the drawdown that we would normally see. And yes, drawdowns belong in the technical leg. But I just, as a behavioral finance guy, want to let you know that there's more to the market than just valuations. Nonetheless, that's why we do the fundamental leg, and each of the four legs matter. Fundamentally, fundamentally, I should say, there is still opportunity for valuation here and to be able to move forward. Moving to that technical leg, you can see a huge bond slide. We've been talking about this since May, the largest exodus of money ever to leave Bill Gross's fund at PIMCO. People have started pulling money out of bonds and going into equities in mass proportion. And you can see that slide as you look at the chart, the bond to bull ratio. Now, guys, this is where I get very, very concerned, and it's people don't understand bonds. Literally, not 2 weeks ago, I was upstairs, CNBC was on, I was getting ready, and the guy was almost crying, talking about the devastation to the bond environment, things that had happened, and how the price of the bond had fallen dramatically, and people were losing money, more volatile than the equity market. I walked downstairs, Barb's got one of the news channels on, and there's a lady there with a big bright smile saying, hey, bond yields are up. Well, that's true. When the bond yield goes up, the bond price falls. Very, very, very challenging time for people. But that's the confusion that we have in the media versus what's happening in the business world. This interest rate cycle is very, very, very important. We're going to have to pay attention to it to understand what's going on and how to be able to move forward, both inside of our portfolios and to prepare for things like Jackson Hole, the Fed tapering, etc., etc. Well, a uniform change does not necessarily mean a new team. We don't do much in the mutual fund environment. You all know that, and you know the reasons why, but this is another one. Over 600 managers have already been replaced this year. The mutual fund stayed the same. People have the same fund, but at least one team member on that team has been replaced. We're on track to have over 1,000 managers replaced this year. Only 775 last year, already replaced more than we did in 2010 and 12 or 11. Why is that? Well, it's because the indices are rising and managers see all of the challenges that are beneath the hood. And many of them have missed the market performance, the market, the return have been up because they've got to manage not for just what did happen, but what could have happened. It's true across the board. It's happened with us. It's happened with other money managers. It's going to be interesting to see how the rest of this year actually works its way out. What ends up happening with the market, whether there's a correction or not, where the strength is. Been very happy with the last few weeks of things that we've been seeing underneath the current, but obviously we're very much in tune with what the Federal Reserve Chairman's doing, what Janet Yellen's going to say at Jackson Hole, those kind of conversations. Moving to the narrative, many of you have heard us say for years that what the American economy needed was a phaser. Think Star Trek. And by a phaser, I mean something that we have that other people want that they don't have. And that's been energy. We've talked about the fracking that's going on out west, the nat gas, now the propane, the big Tres Amigos deal that we've got going down in Mexico to connect the power grids of the United States. Really neat stuff in energy. Tesla is obviously one of those companies. The stock price is off the chart, over $120 a share. The underwriters, Goldman Sachs, says it can't be worth more than 58, and yet the stock continues to go up because of speculation that's in it. That's not what I'm talking about here. What I'm talking about, the fact is that we are after ways to use energy to try to change the way that America operates. We're becoming more and more energy independent all the time. One way is with propane. Another way, obviously, is dealing with the electric cars. GM's trying to get in the game. They've got the Chevy Volt. They came in and they've actually come in and jolted the price down. You still have the tax credit, but they took $5,000 off the price tag of the car to try to get sales up. Tesla argues that they can't deliver as many cars as they have been ordered, simply because their suppliers can't produce them. Whether that's true or not, I'm sure there is to a degree of it. There's a lot of interest. Got a person that we deal with that owns one of these critters. They're interesting cars, but I don't think that's a story. I think the story is energy in itself and in all facets, and the United States continuing to become more and more energy independent. Well, rules to live by. This kind of goes to that money manager thing from the mutual fund managers that have been let go. At the end of the day, the most important thing to know is how good you are at risk control. That was Paul Tudor Jones, and it's very, very true. We've got to be able to take care of all of the things that could happen, not just the ones that actually did. Well, I told people a couple weeks ago, and somebody else asked me about this as well. The Roman Empire, Augustus is what August is named after, and he was the first one to hire a firefighter, which I found very, very interesting. But the bottom line is this market has been on fire, and many portfolios have gone and need to be looked at. We obviously look at all of the ones that we manage here for you, but if there's other money that's out there, if your friends are having questions or comments, please don't hesitate to have them give us a call. We're happy to sit down, have a cup of coffee, see what we can do to help make sure that everything that we have is functioning together. It's also a good time to check out the model and make sure that we've got your money matching what your needs are. We talk about those financial visions, and a big part of that is making sure that we're in the right investment policy model mix for you and your family in terms of where you are. If you get a chance and you're out and about on Saturday morning, don't forget to catch the radio show 9 to 10 on WQME. On Saturday morning, 10 to 11 on Shine 99. And, of course, you can find our newspaper column now moved to Saturdays in the Anderson Herald Bulletin. But you can find it on our website as well at yourlifeafterwork.com. Happy to have you to read it. Folks, if there's anything at all we can do to be of service, please don't hesitate to let us know. We are very, very honored to be of service. We love what it is we do, and I love this Indiana weather. Got to tell you that. Purdue starts back up next week. I hope your kids are to school safely and that things are going well. God bless. Have a great week. We'll see you again soon.